Whoa! Hey there, Sharon Restrepo here, President of the Florida Real Estate Investors Association, bringing you this week's edition of The Fan, the FLREIA Action News. And what's been going on is that we were moving. That's right, we moved offices and we moved our home. So we were doing it last week. We had scheduled it for Thursday, but we were able to move it up a day, so we did so. And in the midst of that, we were unable to film last week's edition of The Fan. So please forgive us, but we'll make it up to you here as we go into this week's edition. So we are still unpacking, but look forward to getting situated here relatively soon and back to normal. But again, what is normal anyway, right? So what's going on here in the news? Let's talk about that. Past due mortgages on the rise. Foreclosure starts rising. Palm Beach home sales taking losses. And the Miami Dolphins. All right, from dsnews.com, past due mortgages on the rise. That's right, the national mortgage delinquency rate edged up during the third quarter of 2011. This is marking the first increase in nearly 2 years, according to TransUnion. Now, the numbers are based on borrowers being 60 days or more delinquent. So, not good numbers to see. Third quarter numbers jumped to 5.88% after the largest drop in the second quarter in the past 2 years to 5.82%. So, things seem like a hiccup. So the guys at TransUnion expect the sudden upward movement in the mortgage delinquencies to be just temporary. The trend of increasing on-time payments that begun at the end of 2009, they expect it to continue. Now, TransUnion execs are also noting that in the third quarter, the consumer, they were hit with several unanticipated shocks, including the U.S. credit rating downgrade, stock price declines, the European debt concerns, stubbornly high unemployment, more downward pressure on home values, and low consumer confidence. So, a few things here that have affected these causes to delinquencies. Anyway, TransUnion forecast predicts that mortgage borrower delinquency rates to drift downward in 2012. However, in the short run, the company says the industry may see a quarter or two of slightly elevated non-payment rates as some consumers are not able to or decide not to repay their mortgage debt obligations in light of the uncertain economic outlook. So, just news to swallow there. All right. And foreclosures start to rise. That's right. Foreclosure starts among private label residential mortgage-backed securities have been rising toward historic averages over the past 6 months, which will lead to an influx of distressed properties, bringing downward pressure to the housing market, according to recent RMBS performance metrics from Fitch Ratings. Rising foreclosure start rates are a likely sign that servicers are playing catch-up on actions that have been delayed over the past year. The rise in foreclosure starts has occurred most heavily among severely delinquent loans. Foreclosure starts among loans that have been delinquent for 6 months or more have almost doubled in the past 5 months. Despite foreclosure starts being on the rise, foreclosure completions in judicial states hover near historic lows. So they're starting them, but they're not finishing them. So, I mean, a lot of cancellations, again, trying to get their ducks in a row, especially I know in Florida. That's been a big deal. They're attributing that the servicers' continued loss mitigation efforts, a backlog in court foreclosure filings, and weak demand in the housing market are reasons for the banks probably canceling these sales. And again, probably an attempt not to flood the market. So now the effects of rising foreclosure starts as servicers work their way through the backlog of distressed loans may not be evident for more than a year. So, again, I guess 2012 we'll see more of the same. All right, and then from Palm Beach Post, and those two reports were from dsnews.com, if I forgot to mention that. Palm Beach Post here is reporting that Palm Beach home sales are taking losses. That's right. 46% of Palm Beach County sellers took a loss. The percentage of homes, including single-family condominiums and townhomes that sold for loss between July and the end of September, was a 3.4% increase from the previous quarter and at an elevated rate predicted to continue through at least next year. Now, nationally, 34% of homes sold for loss in September. That's an increase of 31% during the same time in 2010. All right? In Palm Beach, Broward, and Miami-Dade counties, 46.7% of homeowners with mortgages owed more on their loan than their home was worth during the third quarter. That's up slightly from 45.8% in the second quarter. Now, according to Zillow, these are some numbers here for you. Percentages of homes selling at a loss July through September of this year. Boynton Beach was at 44%, Green Acres at 48%, Jupiter at 45%, Lake Worth at 44%, Palm Beach Gardens at 53%, Royal Palm Beach at 66%, Wellington at 46%, and West Palm Beach at 55%. Palm Beach County as a whole is at 46%. So, again, the opportunities are there for investors to pick up. People are still holding on to these things that need to unload them. So, hey, what can you do? You gotta make things work. All right, and then Miami Dolphins. Yes, we did it. We finally won. That's right. That was 31-3 against the Chiefs. Unfortunately, I did not get a chance to watch the game. I had listened to it on the radio as we were moving things, so didn't get to see. Heard that Matt Moore did pretty good. The whole team seemed to be running on all cylinders, so that was nice to see. So now we're 1-7. Could we still make it? Hey, there's a possibility that we could still go to the AFC Championship. What would happen? We would have to win every game from now on, so that's a lot to ask for. Hey, but miracles do happen. All right, next week we're against the Redskins at home here at South Florida, so maybe we can pull it off there, a second win there. All right, so let's see what's going on at the FLREIA Real Estate Opportunities webinar every Tuesday at 12:45 with Sharon. Now, we did have to miss the past couple of them, again, due to the move. So we will be back on track next week with that. And then our business meeting this month is early. It's on November 10th. So don't forget, Sharon will be teaching on retiring rich with rentals. So one of the best strategies for this market cycle. So definitely come on out and hear her. And then the very next day, we're taking off on our Elite Power Trip from the 11th to the 12th up to Central Florida for some zip lining. So we're going to have a great time up there with our group. And then on the 17th of November, we will get back to God's Property at 7:30 in the morning. And then on the 19th, we have our Mastering 2012 and Beyond workshop with yours truly. So look forward to helping you get off the ground with that, with your goals for 2012, and helping you meet them and overcome them, and overcome the challenges. All right, and then our last cash flow of 2011 will be on December 2nd. So definitely check out the website for the location of that. All right, that's the news. That is the news for this week. We look forward to seeing you at any one of our upcoming events. So don't forget to follow us on our social media at Facebook, YouTube, and Twitter.com, all /FLREIA. This is Sharon Restrepo signing off. God bless. See ya. It's within. The kingdom of God is within me. I carry it wherever I go. Got me some joy.